Yes.
Okay, so now we shall take on a bunch of examples on accounting standard number 10 on property, plant and equipment. Now I'm going to discuss 3 examples in this video, and all the 3 examples are relevant for the Jan 2025 examination, guys. See enter. Okay.
Yes.
So here we go with the first question. Yes.
An entity acquires the right to use an underground cave for gas storage purposes for a period of 50 years.
50 years.
The cave is filled with gas, but a substantial part of that gas will only be used to keep the cave under pressure in order to be able to get gas out of the cave. It is not possible to distinguish the gas that will be used to keep the cave under pressure and the rest of the gas. Evaluate whether AS10 would apply or AS2.
So this example, the question is whether you will treat the gas in the cave under accounting standard number 10, property, plant, equipment, which will be subject to depreciation, or should you consider the gas in that cave as inventory which is held for sale in the ordinary course of business? That is accounting standard 2 on valuation of inventories. So that is a question. Now let us go through this solution. Yes, ma.
Yes, sir. The total volume of gas must be virtually split into number 1, gas held for sale, and number 2, gas held to keep the cave under pressure.
You saw that the total volume of gas in the cave should be split into 2 parts. That is gas which is held for sale, which will come under accounting standard number 2 on valuation of inventories, and then the gas that has to be there in the cave so that you will be able to extract the gas from the cave, right?
Yes.
Which is accounting standard 10, property, plant and equipment. Yes.
So the former must be accounted for as under AS2 as valuation.
Which one? What is the former? The first
mentioned.
The first mentioned is former. And the latter, the second mentioned,
is under PPE AS10.
Will be as per accounting standard number 10 on property, plant and equipment. Then.
And depreciated over the period the cave is expected to be used.
That is all the cost of that portion of gas which is treated as per AS10 as property, plant and equipment will be subject to depreciation over the assets useful life. Is that fine?
Yes.
Got it? So learn this example really well, guys, and write the answer the way it is given in the solution out there. Is that clear? So now I'll go on to the next example where they given some 6 examples, that is 6 instances, and you are supposed to say whether these amounts will be capitalized or will be recognized in your profit and loss account. Is that fine?
Yes.
Yes.
A Limited has carried out certain works on various machines in their engineering plant.
Okay.
Which manufactures high quality metal pattern and templates for use in industry.
Okay.
Now determine in each case whether the cost of improvement can be added to the existing carrying value of the asset concerned.
Basically the cost of improvement, should that be capitalized or should that be taken to profit and loss account is a question. Yes.
So number 1, the cost of annual machine overhaul, which will maintain the originally assess the standard of performance of the machine for coming 12 months.
See, that means what? It is only a maintenance cost. So please remember the amount spent on maintaining an asset. That too is an annual maintenance cost, right? It's going to maintain the asset in working condition for the next how many months? 12 months. Therefore, this amount spent on this overhaul will be definitely recognized in your profit and loss account as what? Repairs and maintenance cost, and should not be capitalized. Is that clear? Next.
Number 2, the cost of repairs to a press machine which was damaged by the emergency services while trying to extricate the arm of the worker who had become trapped in the press.
That is basically he got trapped. In order to remove him from that, okay, extricate his arm, that is hand from the, from that machine, the company had to incur some repair cost. Then
That's it, sir. That is the
that's
case.
it. Okay, next.
Third case, modifications to a cutting machine which will increase its rate of output from 500 to 560 patterns per shift.
It's going to increase what? The future economic benefits, right?
Yes.
Next.
Modifications to a lathe which will replace the current water cooling system with an oil based system, thereby extending the life of the lathe by a forecast 2 years.
You saw that again there's an increase in future economic benefits. That means what? All these expenses will be capitalized. Next.
5. The upgrading of a cutting machine with new software which will improve the accuracy of its measurement and cutting tolerances by the number of microns, thereby raising the quality of output.
You saw even increase in the quality of output is what? The customers are going to appreciate the quality, right, of your output. Thereby, even that is going to increase the future economic benefits. So, it can be capitalized. Next.
Alterations to the production line which will allow automatic feeding from a machine to a next one in the production process, thereby removing the needs for an employee to manually load the second
That
machine.
means what? There will be savings in wages, right? Labor cost. Even nothing but future economic benefit. Remember, when we say FEB, future economic benefit, doesn't mean increase in revenue. It can be what? Even cost savings is a future economic benefit. Is that fine?
Yes, sir.
And guys, I now discuss that is example 2 that is given, no, the cost of repairs. I will discuss that while discussing the solution now. Okay. Here we go.
Yes, point 1, no, this is not a, this may not be capitalized as subsequent expenditure since it merely maintained the originally assessed standard of the performance of the asset.
Basically, there is no future economic benefit as such. It is just going to maintain the asset, right? It is going to maintain the asset in working condition. Therefore, it is not a capital expenditure, not to be added to the cost of the.
Yes, sir.
Okay, now we shall go ahead with the second example, the second point in the question. It is given that a machine was damaged, right? And then the company had to incur some cost because they had to break the machine and take out the arm of the employee. Got it?
Yes, sir.
So now the answer should be, remember, when the machine is damaged, you all know that, from accounting standard 28, that is impairment of assets. You are supposed to recognize an impairment loss in your profit and loss account, applying accounting standard 28. Is that clear?
Yes, sir.
That is when the machine was damaged. And suppose, even though it's not there in the question, suppose you're going to get some money from the insurance company as compensation for the damaged asset, that compensation money will be recognized as income in your profit and loss account. Got it? And the cost incurred by you to restore the asset back to working condition will be capitalized, will be added to the carrying amount of the asset. Is that clear? Please remember, these are three different economic events. Is that clear? One is impairment of asset. Number 2, insurance compensation received, if any. And number 3, the cost incurred to restore the asset. Is that clear? Got it?
Yes, sir.
And that is our point number 2 discussed. Is that clear?
Yes, sir.
Yes, ma. Point number 3.
Yes, the cost of such modification may be added to the carrying amount of the asset.
Very clear, that we discussed already. Point number 3,
4,
4, 5 and
6.
all these are going to increase your future economic benefits. So example, that is points 3, 4, 5, 6 will all be what? Capitalized and added to the cost of the asset. Yes, ma.
Yes, sir. It is given this.
That's it? Okay, guys, we are done with the second example. Now we'll discuss one more example on revaluation of asset. Yes.
A Limited as an item of plant with an initial cost of rupees 1 lakh. At the date of revaluation, the accumulated depreciation amounted to rupees 55,000.
Please remember the two numbers. Now, what is the original cost or what is the gross value of the asset? Is 1 lakh rupees, right? Debit balance. And what is the balance in your provision for, or you can say accumulated depreciation account, which is supposed to be a contra asset technically. It has a credit balance. How much?
55.
It is 55,000. Now, what will be the net book value?
45,000.
1 lakh minus 55,000, net is 45,000. Next.
The fair value of the asset by reference to the transaction in similar asset is assessed to be 65,000.
You saw 45,000 rupees worth of asset is revalued at 65,000, and company following the revaluation model, the company will recognize rupees 20,000 as revaluation surplus, and that surplus will be shown under reserves and surplus as a revaluation reserve account. Is that fine?
Yes.
20,000 rupees increase. Then.
So, past journal entry with regard to revaluation.
So, basically, in this example, you can say the company follows a revaluation model and you are supposed to pass entries for revaluation rupees 20,000 increase in the value of the asset. Now, just see. This is one of the approaches recommended by the standard setters. There are two approaches. And this approach is called, what you see now that is on the screen, is called the depreciation elimination approach. Is that fine?
Yes.
Now, what I do is first, I'll pass an entry as accumulated depreciation account debit. I'll cancel the credit balance. How much? 55,000. To asset account, nothing but property, plant and equipment. How much? 55,000. Now what happens? Now after this entry, the balance in your accumulated depreciation will become zero, and the asset account will come down from 1 lakh rupees to 45,000. 1 lakh debit balance, 55,000 credited. What is the balance left? 45,000 is a balance in asset account. Now this asset account should be now taken to 65,000, right?
Yes.
Now whenever you want to increase an asset, what do you do? Give a further debit. And that's a gain. And AS10 very clearly says whenever there is a revaluation increase and there was no decrease earlier, what are you going to do? The revaluation increase should be credited to revaluation reserve account, or you can say revaluation what? Surplus. Just see the second entry. Asset account debit, or you can say property, plant and equipment account debit. How much? 20,000 rupees increase to revaluation surplus, or you can write revaluation reserve account. How much?
20.
Rupees 20,000. Is that clear?
Yes, sir.
And this accounting treatment is called what? Depreciation elimination approach. Is that clear?
Yes, sir.
So guys, learn these three examples really well for your examination. Bye-bye. Good luck.